the AI is going to change the nature of the labor market, then I think the government of India should invest a lot more in PM Vishwakarma. Things that are done by hand and mind, I think will be a lot more valuable.
We put STT in lieu of the long-term capital gain. Now long-term capital gain is back and it has been ramped up a couple of times. So definitely STT, which causes friction in transactions and also can be seen as a double tax, should be reviewed for sure.
India has to have a vibrant bond market, as you have seen vibrant equity market. If our economy has to grow to become a bigger and bigger.
The long-term capital gain taxes sector should be frozen for a fixed period of 3 years or 5 years. And if at any point of time there's any change, it should be merged that the grandfathering is done.
Government can think of it as similar to CSR, where each company is kind of incentivized to contribute towards R&D, a fixed percentage of their profit.
Hello and welcome to ET Budget Boardroom. Well, my name is Shadiz Ahmed and today we've gathered here to talk about the expectation of the big event, the Power Shift Budget 2026. Well, before I begin my discussion around budget, let's have a quick intro as to a quick intro about the numbers, you could say that. So this would be Nirmala Sitharaman's 9th consecutive budget, and it's going to be happening on the Sunday. Quite a guidance, at this point in time. Apart from that, if we look at the macro backdrop, most of the global organizations, in fact, RBI, Indian government are expecting 7% plus kind of a GDP growth rate for the next 12 months or so. That's a quite, you could say, a solid ground for any economy to come up. And for the budget, which sectors to watch out for? What are the themes that are going to be part of the budget? The capex expenditure, which the government's plans to, we try and cover all these themes in this budget boardroom with our esteemed panel of experts. To give a quick introduction, let me quickly introduce our guests. We have with us Vikas Khemani, who is a founder and CIO, Carnelian Asset Management and Advisors. Welcome to the show, Vikas. So we have DB Singh, Deputy MD and Joint CEO, SBI Mutual Fund. DB sir, welcome to the show. And yes, we have A. Balasubramanian, MD and CEO, Aditya Birla Sunlight AFC. Ashish Sumaya was a CEO, White Oak Capital Management. And Navneet sir, MD and CEO, HDFC Asset Management Company. Welcome to the panel, esteemed gentlemen. Right. Now, budget 2026 is actually coming at a time when there's a lot of uncertainty, global uncertainty, you could say that, around the corner. And how will the Indian government make it a power shift one? I think that's the first question that probably I'll put across to Navneet sir. How do you see that?
Sure. So first of all, thank you, Shadish, for having me. You mentioned a couple of points, and one of them was about this is the 9th consecutive budget by the same finance minister, Mrs. Nirmala. And so sincere compliments to our FM and to our government for their continuity. We also mentioned about it's coming at a time when there's a lot of global uncertainty. So the only thing I can say about global macro and global politics is the continuity of uncertainty. that looks like it's going to be there for some time. But at the same time, in India, I think we have continued to pedal more on the reforms, and the government has not been waiting for the budget day to announce a particular reform. We have seen whether it's a GST simplification, whether it's a labor code, whether it's many other reforms that have been announced already. Sure. And I'm sure everybody has been waiting for the budget day to see the path towards fiscal consolidation, path towards further capex program, the path towards more measures to spur the growth. Growth numbers have been pretty good. We have to see in the light of the global environment, and they're growing at more than 8%. Having said that, I'm sure the government will do whatever it takes to take the growth to the higher level. I must compliment for another reason, apart from the 9th consecutive budget, that the budget is coming on Sunday, which is action back. And I think it's also a message to 1.4 billion people that the government has been working 24/7 for the nation. And I think it's a responsibility of everyone, as Prime Minister keeps saying that Sabka Saath, Sabka Vikas, Sabka Vishwas, and Sabka Prayas. Right. The government surely is doing all the prayas, including working on the Sunday. I think it's a message to everybody that given the global environment, while there are challenges, but there are massive opportunities for all of us to do well.
Right. Absolutely. It's walk the talk. from the absolutely. Ashish, let me just quickly come to you. Atmanirbhar Bharat, and it has basically converted from intent to execution now. How do you see all this framework? Do you see more Atmanirbhar Bharat policies coming in for this budget 2026?
Yeah, I think obviously, if you see, we have been doing variety of steps, whether it is the recent, labor code relaxations or before that, all the production linked incentives, right? So it's a continuing kind of endeavor. And given where we are, right now there is a lot of turmoil because of geopolitics, but I think one thing is not going to change, that we will still be the largest economy, as in the fastest growing large economy, and obviously the biggest consumer and labor force of the future. So given that that magnet is still with us, ultimately everybody would like to do business out here over a period of next 10 to 15 years. So I see that more as a, continuity. And, you are likely to see more and more steps being taken, apart from, if you see even 2019, the whole tax related initiative was obviously to spur manufacturing. Now we have seen certain sectors, when you see electronics manufacturing, when you see auto ancillaries. So there are sectors where you're already seeing this gathering traction, right? So I think you're likely to see, we should get used to seeing more of this over the next 5 years, I would say.
Absolutely. And Make in India has become part of the government, you could say, the advertisement, and we're seeing that, the tiger across everywhere. So, Bala sir, let me come to you, especially at a time when, they talk about sanctions, they talk about, tariff war, they talk about, the supply chain getting affected. How will Make in India as a thing will, show up in this budget?
So I think the way I see is, I think India has always come out as a winner, especially during the crisis time. Historically, if I look at the last 3 decades, whenever we are pushed to the corner, whenever we are being challenged by any global environment, could be related to the sanction, it could be because of economic activities, or it could be because of the trade war and or even geopolitical risk. I think India has always been come out as the winner. I think my view, India is at a sweet spot in that sense. Second is, I think this Make in India theme. I think it was started in 2017. I still remember when Raghuram Rajan was the RBI governor. That is the time it was being discussed widely whether we should make in India for India, or we should make in India for global. And that actually gained momentum significantly. Today, India is actually we can take pride. I think we are producing a lot of goods within India for India consumptions as well as for exports. And second is, and the fiscal situations, we are on sweet spot. I think globally, including the large economies with whom currently we have discussion about trade war. So they have their own problems of fiscal slippages. And most of the countries, even including developing countries, if you look at it, they have their own challenge of fiscal, except probably Europe. And India is the only country where the fiscal achievement, that the nine Honorable Finance Minister, Nirmala Sitharaman, the bigger achievement, I would say, very quietly, which has been done, is on the fiscal consolidation. Correct. Which also, my own belief is, while we can talk about fiscal consolidation, we can also talk about fiscal stimulus, which can be provided in case the country needs. So in that sense, I think we are in a sweet spot. And whatever step that are being taken in the past is now, I think, is actually started playing out quite nicely. And the last, of course, is the amenable to the change in the policy. I think despite having seen reforms being carried out last so many years, now government is talking about the third round of reforms, which essentially means I think we are thinking far ahead of the years to come, and then see how India should stand out as a winner in the current global crisis. Therefore, while the trade war and other issues that's coming and hitting the headline news, but India has been quietly working in the background to ensure we remain as the fastest growing economy, and so that we have all the policies that are relevant, they are tweaked and then amended in order to ensure that we not only sustain it, making it long lasting. I think we are going in that direction. One of the specific point which of course I have been noting is today India is a country where the cost of capital is the least. Anybody who wants to actually build a business in India, the cost of capital is least, whether it is through the equity or through the debt. And even US home loan rates is higher than India actually. So that's the way I think India has progressed in terms of making cost of capital low. which I'm sure will make it far more interesting as the times to come in comparison with the global market.
Markets, right? Fine. There's one word that you specifically talked about is fiscal stimulus, and I'll take cue from that because fiscal stimulus is something which spurs growth. So, DP sir, on to you is 7% is given. That's what the government says, and most of the foreign global organization are also probably pointing towards seeing some headlines around that number. How far is that realistic? One. And the other part is that because of the global backdrop that we are seeing, which might hit the growth cap for India. So, do you see that becoming a challenge for India?
I think this 7% growth or 8% growth which we are talking about, this itself is a very, very big tailwind for us. So that itself will take care of so many issues which are globally happening because of our own market. And in a market where HUL sales are lesser than the Apple phone sales, it tells us something, right? So the local consumer, the local consumption, the GST, the stimulus which was given, I think they are not doing just in time on the other side. They are doing just in time, as Navneet rightly said. They are not waiting for the budget date or something. And the way very quickly in time, see whatever is being announced is being announced. So that's something which is going to give us a big boost. Even if you look at the US way, which we are having tiff today for the trade war, every now and then if you see the trend, one day they are looking at us in a different way, and the other next day they are saying, no, placating, no, India is there, we can't leave it. So we are in a situation that whatever the tailwind, there are problems globally, nobody can afford to leave a market of 1.4 billion. So that is something which is very, very great help for all our businesses. And as Balaji said rightly, the cost of capital is so low, our businesses will grow. Our issue is little different. Now, how to corporatize our businesses more, how to create more market caps and etc. etc. Those are the issues for which again our government is doing a great job. Need to be complemented to get more and more businesses. I think this 8% number itself is the magic number which will take care of all the ills which is there globally.
Absolutely. Well, on that positive note, because let me come to you. So growth is given, that's for sure. Okay. Now comes the capex part. We see the magical number, angel number. You could say that 11.11 lakh crore, 11.11 lakh crore kind of a capex that was being announced. In the budget last time. So this time around, do you see more capex coming from the government?
So I think, if you see, this government's focus has always been, focus on capacity building, whichever ways. And there are multiple ways to do that. One is, of course, through budgetary support, but secondly, also through a lot of measures where, you can have SPV-led capex, where, you can have triple, PPP kind of models. So a lot of capex today is not necessarily happening through the budget. So I think only looking towards the number in the budget and to determine whether government is serious about capex or not is not probably only right thing. But having said that, government has been very generous in terms of allocating capex side, and why not more? So as much as you can, but it's always balance about fiscal prudence and financial projections. In capex, actually more than as we hear from the ministers, and as you see, the real challenge is not actually budget. Real challenge is actually execution capacity. Today, India is actually suffering more from execution capacity than really finances, whether it is private sector or PPP model or government sector. So I think that needs to be, that would probably anything to be done on the execution side probably would be far more accelerating the growth than really only allocation. But yes, my answer would be that yes, you would want more capex because capex builds capacity, drives efficiency, and obviously boost growth.
Right. Just another question follow up on that. More than 11 or anything around that?
I think it's definitely be more than 11. Obviously you have to grow as per your financial. We are having more tax collections. We are having more tax collections, so everything should grow. There's no, in my opinion, doubt on that. Now, how much and all that, I guess we will see soon.
Absolutely. Now, Nisa, let me come to you on markets now. This is something which we want to also talk about. So, in the year 2025, definitely we've hit record highs. Momentum continued. There are some headwinds in the year 2026. Perfect, all right. But the earnings haven't really grown as such that, the P multiple expansion has happened, but the earning multiple hasn't really happened. I'm not saying that budget would give that kind of, any indication, but definitely the steps taken in the budget will definitely aid India Inc. to perform on the earnings. But what are your views on that?
So there are two ways to look at it. One way to look at it is that this was a 10th consecutive year of positive return by Nifty. Of course, the small caps have underperformed because they had outperformed earlier, and we had to have some adjustment on the valuation side in that space. The other way to look at it is Indian markets underperformed most of the other global markets. There has been a chase for anything related to AI, and India, the perception is that India has been lagging behind in AI. My view is structurally India will be a big beneficiary, and we would emerge as the use case capital of the world as far as AI is concerned. And this will give a lot of opportunities to corporate India over a period of time to enhance productivity, to look at newer avenues of growth, to serve their customers better and expand the market. At some stage, when we see a correction in the AI trade globally, I think India would be a beneficiary, because I think we can emerge as I would say, an AI hedge in relative to some of the other markets. One of the hardening feature has been the continuous flow from the domestic investors. In the last 5 years, domestic institutional investors have invested close to $250 billion at a time when foreign investors have been net seller. And my request to the government would be to ensure that the faith and trust of the domestic investors continues. I think the fiscal incentive for investing into long-term assets, into risk assets, that continues, and should find more ways how we can monetize or how we can channelize the physical assets, the money logged into physical assets like land, gold, and silver. If that can also be channelized through the fiscal incentive into the capital markets, I think that will be very positive. As far as earnings are concerned, I think government has been doing its bit. All of us have talked about the continuing momentum on the reform side, and if government continues on the capex side and remain on the path of fiscal consolidation, while RBI is doing its bit in terms of releasing liquidity and cutting interest rates, all of that together is spurring growth, which should ultimately lead to higher earnings.
Right. Absolutely. Ashish, Naveen really mentioned this point on the FII front, and we are seeing this kind of outflows from FIIs, especially in the year 2025. Is there a possibility that there could be something or some initiative taken by the government to really, give them the incentive, the FIIs, to hold on to any selling spree that could be dollar-led, could be anything that's been happening. So you see that happening?
So, no, I think that the FI selling is, in the last, say, 12 to 18 months, is two-pronged. One, of course, is that, somewhere in 2024, we started to slow down. Right. And, markets kind of went ahead, whereas there was clearly, we were talking about, like 5% GDP growth and practically nil earnings growth. We had restrictive policy from RBI, right? And the government was out of action and elections and all those kinds of things. So somewhere in 2024, we did start slowing, right? And that was one reason. And parallelly, you could see that there's a massive AI-driven rally in US. And then, of course, China, South Korea, Taiwan, they are considered or perceived to be more in front and center when it comes to AI. So, of course, within emerging markets funds also, you can imagine that if we are slowing and if the action is moving somewhere else, there could be rebalances and there could be money getting reallocated. That could be one. The second thing is, any which way, if you take a slightly long trend, globally, FIIs or, global investors, they have been investing more in US.
Yeah.
See, if you look at it, if you look at all the league tables, I think that US is the best performing stock market globally in dollar terms.
16% in real terms.
Yeah, like last 15 years, US return in dollar terms is 15% compounded.
Yeah.
We are sitting in India, we don't feel so much of the pain because first of all, most Indians don't invest outside the country.
Yeah.
And second of all, any which way, India is the second best performing market after US. Recent times there has been Taiwan, but it's not comparable. But if you leave India, you see the other emerging markets, their actual performance is quite disastrous.
Yeah.
And if you look at relative flows of FIIs, India has been singled out for special treatment actually in terms of positive flows. You look at the tiniest of countries, you look at Philippines, Vietnam, or you look at Taiwan, you look at any of Thailand, look at any of those countries, they have huge negative flows for many, many years in the last 2 years. Correct. So I think India has been actually receiving more flows than other emerging markets. We have rewarded foreigners also. And only in the recent times it was more related to this AI trade and some slowdown out here. My sense is that in 2026, at some point in time, this will reverse. Right? The moment, for a long time, there's a Damocles sword hanging on the US market, whether the economy slows down or the market corrects, whichever way. Outside AI, there is no growth. So at some point in time, the US market will give up on its strength and you will see some reallocation. In my sense is that I don't know from where in 2026, early or later, I don't know. But eventually, I think at some point in time, it will turn and we will again be seeing, huge, reverse movement in terms of flows. Last thing to keep in mind is that for FIs to start investing, ultimately even the rupee needs to stabilize at some level. I'm not saying 89, 90 or 91, which number is important, not saying. But anybody, whether it's you or me, if the rupee is depreciating, the inflow will get postponed and the outflow will get preponed. Right. But if the rupee shows a reverse trend, then the inflow will be preponed and outflow will be postponed, right? So I don't think that FI flow will change or depend on any incentive, really speaking. Sure. It is more related to other factors. Last thing, I'll make a point that, yes, when it comes to taxation for global investors, like White Oak is a very large foreign investor. We ourselves manage about 7 billion as an FI, right? Correct? But yes, when we invest all over the world, we don't have this kind of taxation. So that's a fact that for India, relative taxation is higher. Even if you debate capital gains, that's fine. But STT definitely is, we put STT after removing capital gains. Now we are consistently ramping up capital gains, but we are also ramping up STT and not that, So that definitely is something, is a bone of contention when people compare markets. And I think that should be looked at. Yes. But I think, the reason for outflow is not really taxation. The reason for outflow is many other things.
But very good point there, Ashish. And in fact, the tax ops or, taxation front, this is something which is there for every other country as well. And you're seeing that it's more easy for you to probably invest and
typically we manage emerging market funds. Okay, this emerging market fund is domiciled in Dublin, and from Dublin we invest all over the world. Right. They don't pay tax in most of the countries, but when the fund invests in India and withdraws from India, it has to make provisions for taxes. So I think we need to at least get to parity, or we need to compare ourselves with other global markets.
Absolutely. Valid point there, Ashish. And, there's another good point that you mentioned about how AI is also taking the center street. So, Bala, so to you is lot of themes which captured attention of investors was, one of the themes was AI, definitely. But there's clean energy, there's, hospitality, and and most of these themes are accessible through US markets per se as well. Right? So, and some of it is happening in India as well. I'm not saying that it's not been happening. I'm just saying for the new age sectors, are you looking at one of the prominent sectors which could get more attention in this budget from the finance minister? Could be defense, could be, could be around AI or boosting up that kind. Any sectors that are on your radar?
So I think if I think India is the only country creating a real hard assets. The last few years, if you look at the capex, so 11 lakh crore kind of budget, which is being allocated, it's towards building India's manufacturing capability by incentivizing manufacturing companies on one side. Second, making it more self-sustainable in the areas of defense, in the areas of renewable energy, in the areas of road infrastructures, in the areas of port, in the areas of airport. I think we're still a long way to go. Even rural India, there's still a lot of investment can be made. I think we need to look at it where the money can be absorbed. I think India still have the sectors where we already taken initiatives, right from defense or dimension about. There are many sectors, it can still consume more capital in order to make it more, not only self-sustainable, to make it also more supply. We could become a potential supply nation for the global market. Second is the waterways. I think India has got, I think it's been one of the oldest pet project of the government. One of the longest discussion they would have ever had. But we still have not done much in this space. I think we still have water transport ways, which is especially from a logistic point of view, it can consume a huge amount of capital. I think India is one assets which I think is it's something we are actually focusing on real assets building. Therefore, we can still do more on that space. Whereas if we take a US, the capex that is being talked about in US is about investing in AI is considered as a capex there. So when I compare to that versus India, so we are creating real assets. Of course, AI we can't ignore it, given the fact that which will it will turn out we do not know. Right now, only the debate is about valuations, bubble, etc. But otherwise, AI is an asset class cannot be ignored given the fact the world is going into the new order. But having said that, India is one real assets will definitely start benefiting, and finally from government point of view, the last few years, the whole narrative of the building the infrastructure through the private contributions versus public sector investing. I think the public sector investing, government investing in various asset classes actually gone up quite significantly. Therefore, ability to monetize some of these assets and therefore raise resources toward the next level of growth also will not be a big challenge for us, because most of the assets that has been built are the earning assets in some form or other. Therefore, monetizing these assets I think will become relatively easier. Therefore, probably you will see as we move forward, this asset also getting monetized. Therefore, you are able to fund the future growth much more strongly. And the earlier mentioned about the foreign institutional investors investing in India, while they have been moving out from the country, we must also remember that most of the people who have moved out of the country are in the name of FDI investment as well as portfolio investment. Those who have been investing in India as have FDI investment, all of them actually got out of the country by way of selling. Private equity investors have made money in India. So all of them have gone back, maybe withdrawn money with a huge amount of profit that they have made in India. Therefore, it's obvious for them to actually see that experience, and therefore they can come back. And second, rupee dollar being at about 93, with interest rates coming down, there is high probability India will become more attractive for them to invest among the emerging market. Therefore, as long as we continue to maintain the Viksit Bharat direction, that growing at about 7.5 to 8%, visibility for growth is high, visibility for investing is high, visibility of corporate earnings are very high, then naturally FIIs will come. I think taxation-led initiatives, I don't think India need to take any more, given the fact that we will, as long as they are able to see the earnings coming in, and I'm sure the FIIs will come back.
Absolutely. FIs will come back. That's a message coming from Bala sir. Now, let me come to you on that taxation part only. Any measure that you expect from this budget around tax ops, or especially from the on the rural front, you could say that?
No, I think, see, government has already front-loaded last year, whatever. Nobody expected that it will go to 12 lakh rupees. So on personal side, expecting anything will not be right. But some kind of fine tuning is definitely required. See, on various things which we can do. We always wanted some soaps to be on the to come on the debt funds specifically, because this has been for years and years we have been talking about deepening of the fixed income, the corporate bonds, so on and so forth. But with the marginal interest rate, the debt funds are not getting any success. But at the same time, we have to see that most of the fixed income things are being played through the hybrid funds today. So not much, but only STT part, which has already been talked about, and some fine tuning in the GIFT City. Because today we are talking about, when we are talking about the money today, when we look at it, the kind of foreign exchange reserve which we have, the outbound the limit, which was $7 billion, has remained $7 billion for ages. I think it requires to be seen, because the $7 billion itself will be now, actual value will be much more than $7 billion. But we can't even churn from one company to another, because the moment we do that, we can send back only the principal, the nominal amount. So that is something, and with the gap on the demand supply side, and we are getting a lot of money coming into the equity side through SIP mode. I think that this is something which is expected, that if we can have a higher limit on the offshore investments in the mutual fund scheme, that will be good for the investor, for the country as well, because all the investment which is made through mutual funds in any case will come back. It can be considered as part of the foreign exchange reserves itself, because it's not done by the central bank, it's done by the individuals. And government can always call them in case of any eventuality, which is not likely to happen. But if there is any such eventuality, government can always ask the funds to unbound and bring the money back. So that's something, that's one expectation which we have been talking about for a long time. This is something which is very, very important.
Absolutely. I'll hold on to that thought of SIP investments there. But in the meantime, I think you did mention about the GIFT City, and Ashish also mentioned about how there are not a lot of Indian investors who invest abroad, and that is something, if they want to diversify, I think GIFT City becomes a very broad and the valid route to go. And some investment coming in from that route is also something which will bring you beneficiary. Do you want to add something there, Ashish?
No, just on the taxation, I think one other point which you need to keep in mind is that, for example, our dividend tax is also quite onerous, right? Because if you see, there are two aspects to this. Companies obviously declare dividends from their tax-paid income, right? And then when it reaches the shareholders, the dividend is again fully taxed, correct? I think that is not ideal. It's clearly double taxation. And the other important thing is that it has a side effect. I'm not saying it is happening, but it has a side effect of worsening governance because you're incentivizing companies not to pay dividend. I mean, you're actually making it a disincentive to declare a dividend, right? So I think, and in our country, promoter holding is extremely high. It's, at an aggregate level, 50% is promoter holding. So you should actually, like a country like Brazil, for example, if I'm not wrong, they have something called minimum dividend obligation.
Okay.
As from the profit, you have to compulsorily declare some amount as dividend. Whereas in India, we are going reverse. We are actually indirectly, in a perverse manner, preventing declaration of dividend. So I think that also needs to be rethought, actually.
Absolutely. Valid point there for Ashish. Now, so Vikas, let me also come to you. And I said that I'll hold on to that thought of SIP. Now it has touched 31,000 odd crores coming in, the SIP contribution. More financialization of SEBI, do you see? And is there any incentive that probably budget could bring in this time around?
I think as far the SIP towards the mutual fund is concerned,
And it's good for everyone else.
it's good for everyone. People have systematically allocated large amount of capital. Still, our financialization of household savings is still a very early stage. I think it started meaningfully thanks to the mutual fund industry 10 years ago, 12 years ago.
Oh, yes.
And it has created a
long way.
We've come a long way, but I think still there's a long way to go. If you see household savings exposure to financial assets could be as high as 15-20%, but today we are in just a single digit still. So that will continue. But I think the side effect of SIP, which has happened, and combined with the fact that with the new tax code, the tax benefit on the fixed deposits have gone away. As a result of that, fixed deposits in the banks have become very unattractive. And that has actually, created a very big problem for the economy. If you see today, the loan to deposit ratio of banks are almost at a hilt. Banks are, while RBI is cutting the interest rates, banks are struggling to raise deposits. And I think somewhere, in my opinion, because credit flow to the economy is very important. Even if RBI cuts the rate, if banks are not able to raise the rates, how would that percolate down to the economy? So structurally speaking, while SIP is a great thing, but I think that needs to be also put in balance, that banks also continue to get deposits. So I think probably, but anyway, that's also part of the financialization. So in a way, I see that trend continue, to answer your question very clearly.
Absolutely. Now, Manisha, any sectors likely to benefit the most? I know it's a. I'm sure you would love to answer this one, but yeah, Vivek, energy.
We are a bottom-up stock picker, and I think I'll always mention this: India is a stock picker's paradise. I mean, you get opportunities across many segments, many sectors, in an economy where 1.4 billion consumers, starting from a very low base, over a period of time that will keep increasing. On the manufacturing side, over the last couple of years, government has taken significant steps, right from reduction in the corporate tax to PLI to, improving the overall logistics infrastructure in the country, to a lot of efforts towards indigenation and procurement from Indian companies, so on and so forth. And I'm sure it is going to show some results. We have seen government working very hard on energy transition, on EV transition, on getting the new age manufacturing like the semiconductors and good moves towards the AI, etc. So I think India will participate in many, I would say, growth opportunities. Yeah.
Absolutely, Ashish. I'll probably trim this question to one particular sector. Any specific sector do you see wherein you could see more incentives coming in? Last time, like that, there are a lot of things around the EVs. With this clean energy, something that you're looking at, or probably AI, something that you're looking at?
No, I don't think. See, I'm not very clear in terms of how.
Infra was something which was really heavily,
Yeah.
government was pretty much very excited for the infra space. Will that still remain the baby?
Yeah, see, I think we have to see it in two parts. I mean, clearly, if you look at it from the market perspective, like in the last 2-3 years, there was a lot of excitement for defense. Check. Now the thing is that there is PLI, there is indigenization, there is geopolitics in the air, all of these things happening together. So, but what happens is when you look at from the market perspective, while the government has been focusing on it in the stock market, it's already played up a lot.
Absolutely.
So we have to distinguish between that, right? And second thing is that if you see in the recent times, all the action that has been taken seems to be, more towards boosting consumption, or the government has moved to the demand side.
Sure.
Correct. So if you see whether it is tax cuts, GST rationalization, or the eighth pay commission, or even every state election, there has been some announcements that have been happening. So my sense is that till now maybe we were working more on capex and supply and infrastructure, but now it is being, these are all cyclical things, right?
Right.
So now we are probably, the cycle is moving towards revenue expenditure and working on demand side rather than working on supply side. So that is just like reading the tea leaves. And my sense is that anything that happens should be more on that side rather than on the capex or infra side.
Absolutely. Bala sir, let me also come to you. Let's from a valuation standpoint, how is India placed as we enter, let's say, 2026 or the budget 2026 compared to EMs and
Yeah. See, one good thing in the equity market valuation is the last 2 years Indian equity markets have somewhat given a flat return, I think. So I think if you take Nifty or Sensex, they are given a single digit return. And we also seen rest of the market, which is smaller mid cap, also have given a significant underperformance to the market, which essentially means that whatever excess valuation, which probably would have remained about, say, 1.5 years back, that got corrected. And since then, the various steps that is being taken to drive the economic growth back to normal, which is a fast growth economy at about 7.5 to 8%, by way of cutting rates and the GST cut which came in last year, they are led to play out in terms of reflecting on the earnings of the companies. So I think my own belief is to start reflecting on the earnings of the companies in the coming, say, few years. Therefore, the valuation is something would remain a point of discussions, may not be a stumbling block, given the fact that we have gone through a consolidation of the market earnings, time value correction, what you can call it. Therefore, it's only expect the momentum to come back as per the equity investment concerns, driven by earnings coming back first. Then government push in terms of next round of reforms will actually open up the economy actually to look at more opportunities to come as an opportunity in times to come. Therefore, these two things I think will probably drive the equity market to get into the somewhat the next round of growth momentum. But having seen that, we must also accept I think India's own market where has been funding large pool of growth needs of companies by way of enabling companies to raise equity capital. Therefore, demand supply so far is being, if there has been less of demand for supply of equity issuance, I'm sure equity market would have done far better than what you have now done. So, but this is a good problem to have. I think you are able to actually make balance sheet of the company more cleaner. The ability to borrow and invest, it goes up quite significantly. The multiplier effect of that is going to be significantly higher. Therefore, my own belief in the next 3 years, you will get the leverage benefit start accruing to the companies. Therefore, the future growth plan could be more materialized, and therefore going to the next round of growth momentum.
Totally well point there. Now, Divi sir, let me also come to you about the private capex part. Do you think this is more important now? Of course, government is spending. That's public capex. That's anyways there. But should private capex should also come up if they have to support the Viksit Bharat theme?
See, is a mixed bag. When we look at the numbers, the private investment in the capex, in some sector it has started coming, some sector it is not. Okay, that's very clear. There's a bifurcation we have not seen in a big way. But I think when we talk about the government infrastructure spending also, that will also see a change. Earlier infrastructure meant the road sector, the so on and so forth. But I think it will be different now. It will be more railways, more on the, rather than the PLI, more on the AI, R&D and so on and so forth. That is something, it will a mixture of public and private capex put together, which will see a hike. But I think it will be more public-private, together doing it in a particular area. The narrative changed so fast. I mean, a few months back, everybody saying India has invested very, very less in the AI, right? And today the narrative is that India is going to be the largest AI supplier to the globe. So this has happened in few months only, right? Because of some actions taken by the private sector, as well as the boost given by the public sector, the government. So that's, I feel, this R&D spending will go up from private sector, and the capex will go up, but it will be mix and match of both government as well as private sector.
Absolutely. Because, sir, let's quickly shift to the equity theme. Not considering the budget, but क्या लगता है for large cap, mid cap, small cap? We've seen quite a bit of small and mid caps have come off from their highs. So how should one play this equity playbook in the year 26?
I think, long-term growth story is very much intact in India with the GDP growth, and we are sitting 2025 was a difficult year, but if you see every 3-4 years we see similar year. Exactly similar year was 2022. 21 was great year. Ukraine war started, and by the time in September, October happened, we were in a supreme pessimism. Nifty was up 4-5%, and mid and small cap was negative, right? And that time there was no news, but slowly market started recovering, and 23 turned out to be good, 24 turned out to be good. 24 second half or September 24 when peaked out. But you must understand, our corporate earnings slowed down only in December 24 because of the liquidity squeeze. We had for a long period of time, negative liquidity in the system, and that kind of impacted the corporate earnings with a lot. New RBI governor has done a great job in terms of keeping the liquidity in the system, having a growth boosting policy. So today, if you just see fast forward, we are sitting on a backdrop of a strong monetary stimulus, a great fiscal stimulus, GST and income tax rate cut. Government spending is strong, private capex has picked up, right? GST collections are strong, GDP number is strong, insurance premium collections are good, credit growth is around at 14% December number if you look at. So if you see, fundamentally speaking, there is nothing which is kind of negative from a direction perspective. The only argument you can talk about is the valuation. Now, I think valuations have corrected 20-21 times Nifty P, in my opinion, is not at all expensive. We are not cheap, but we are not expensive either. I do believe that, and if you again look at since 2000, post-global financial crisis, any year where there is negative returns of Nifty small and mid cap, you see following year has been, there are at least 5 such incidences where following year has been a great year, right? So I think the risk reward remains very, very invested. So right now there is tug of war happening between the local macros, which are solid, versus the global concerns, right? Now we have seen that eventually it will play out. We have talked about tariff was a great thing great concern in April, but tariff is still around and markets have recovered from 22,500 Nifty to 26,000. So I think we will get used to this in the next couple of months, I think, in my opinion. And in investing, I think vintage plays a very big role. I do believe like 2022 vintage was a great vintage, right, to have in portfolio. I do believe this current vintage will have a great outcome. So risk reward of, in my opinion, investing into equity, increasing allocation into Indian equity is very good. And also we are sitting on a backdrop of a significant underperformance with all other emerging markets, right? So I think this is a complete confluence of so many factors where you're getting a great opportunity to deploy. So I think 2026 would be a great year as compared to, or will be a better year compared to 2025. How much better will depend only how the situation pan out. But I think economy is progressing in right direction, and I'm quite hopeful that, budget, if not positive, there won't be any negative. I'm quite sure that government will have some, aces up its sleeves to kind of give direction, positive direction. And I hope that, there are a few, positive sentiment outcome comes out on that.
Absolutely. I think I'll take from that 2026 will be better than 2025. Before I close the panel discussion, I think I will have one question to all our panelists. So Navneet sir, your 3 expectations from budget.
Trillions of dollars of household wealth is locked in gold, silver, and land. Every year we import a very large amount of gold and silver. If we can introduce something like a Section 54F where people are incentivized to sell these assets and deploy that into long-term equity, that will do a lot of good to the country. Number 2, I would say if the AI is going to change the nature of the labor market, then I think the government of India should invest a lot more in PM Vishwakarma. Things that are done by hand and mind, I think will be a lot more valuable, and we need to get the glory of doing things with hands. And third, I would say substantially higher investments in AI and R&D. India has a real chance of becoming a global leader.
Yeah, I think from market perspective, when we talk about expectations, I think wherever there is like a dual taxation or a double taxation, say for example, dividends from listed companies, I think that needs to be reviewed. And of course, now we put STT in lieu of the long-term capital gain. Now long-term capital gain is back and it has been ramped up couple of times. So definitely STT, which causes friction in transactions and also can be seen as a double tax, should be reviewed for sure.
Of course, as I always expect, budget should display the continuity of various tax provisions, which is what has led to India's growth story to become real. And therefore, taxation should continue wherever is now being given as an incentive. And second is the fixed income as an asset class also need to be considered, given the fact that India has to have vibrant bond market, as we have seen vibrant equity market. If our economy has to grow to become a bigger and bigger, we need to have both the bond market, capital market asset, which is bond and equity, should go hand in hand to fund the future growth of the India. Therefore, I would expect some element of consideration for the fixed income market through the mutual funds would be more ideal to make India more self-sufficient to fund the growth needs of the country as we move forward.
And I wish the long-term capital gain taxes sector should be frozen for a fixed period of 3 years or 5 years. And if at any point of time there's any change, it should be must that the grandfathering is done, which was not done last time. I think that should be a basic principle. Any change should be grandfathered before that. So that's one thing which will boost more certainty. And the second, wish that the offshore limits be increased to at least $30 billion from the current level.
I think while continuing the balance of fiscal prudence and growth orienting policy in the capex investing, some of the changes which government could see, India needs a strong investment in R&D. Maybe government can think of a measure similar to CSR, where each company is kind of incentivized to contribute towards R&D a fixed percentage of their profit. Some scheme similar to that would be great, is sort of a boost for building India from long-term perspective. Regarding, I think, capital markets, I do believe that there is no case for having both STT and capital gains, and one should be removed, whichever one government chooses. But I think double taxation is highly avoided. And thirdly, I think the double taxation of dividend, in the hands of the recipient, company pays and at a maximum marginal rate is very, very, sort of onerous. It can go back to, either zero tax or flat rate of 10%, which used to be earlier in case of dividend. I think that will be very, very, essential in my opinion, from a sentiment boosting perspective. And lastly, I think given the current situation of a geopolitical situation where till the time tariff is around or uncertainty is around, some of the sectors which are directly impacted, such as textiles and some of the segments which are exporting to, there should be some incentive, some cushioning should be given as a rebate to those sectors, also credit support to those sectors, so that there's no job loss of employment happens and those sectors do not get permanently damaged till the time this tariff answer is found out.
Well, on that note, I think thank you so much, esteemed guests, for giving your expectations from the budget. And yes, one thing is for sure, that Indian economy is on a solid ground and the only way is up or higher. Thank you so much, everyone, for your time then. Thank you so much.